Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Alongside with me, we have Miss Barbara Armstrong with us. Hey, hello and welcome to all of you here. We got Silas, Texan, Ray, Kelly, Ron. Scott says aloha. Scott, in less than 2 weeks, I'm going to be over where you are. Boy, hopefully those palm trees are ready. And I'm just hoping my Irish skin is ready for some sun. Okay, little pasty white right now. I'm getting there. Probably should tan before I go over there. And also, Gary, hello and welcome to you. Hopefully, everyone had a good weekend. We're right back at it. We did a lot of family stuff this weekend and a lot going on in the Boyd household and with Jackson. Jack says thank you for those comments. Real quick, as we get started, want to give us a reminder that some of you had some questions, and we're going to mention those questions as we talk here today. We want to kind of give a format as far as like kind of a way to read the market. We've talked about things from a bullish perspective. Today, I like to kind of bring up some bearish examples in the world of kind of technical analysis and trading with those indicators, but using it in the opposite way that we do bullish. Now, remember with what we discuss here today, when we talk about examples and I share information, remember that the information here is provided for general informational purposes only. Options carry a high level of risk, not suitable for all investors. We'll do stock and option trade examples. Remember, when we talk about our examples, we will do those on the Paper Money software application. When we talk about investing, investing involves risk. And also remember that coming up, if you went to schwab.com/events, we have some upcoming events we want to make sure that you're aware of. First, we'll be in San Diego. Okay, so the last weekend we were in Chicago, right in Schaumburg at the Renaissance there. And coming up in San Diego, June 5th and 6th, we'll be doing a 2-day event in San Diego. If you're a Schwab client, I'm sure you are. Go to schwab.com/events. You'll see some of these events that are here, but also all the events that go out through the entire year. You do not have to live in that area. You might be traveling in that area. Just join us. Okay. Chicago, we'll come back to there July 17th and 18th, and the Dallas Market Drive August 1st. So, really, the 2-day events are first day technical analysis, second day option strategies, and the 1-day event called a market drive, where we're kind of talking about the market as a macro view, kind of some news, strategies. Join us there. It's always different when you learn from a live format. Now, just real quick as we get started here, I want to kind of go into kind of talk about the market in general. We have 4 charts that we want to start off with. These 4 charts that we start off with is the base for whether the market is probably more bullish or bearish. Okay. And I've already seen those questions in the chat, so I'm getting to those. So I want to look at those 4 charts. Okay. And probably about 6 weeks ago, we talked about these charts quite a bit, and it was actually a pretty good indication as far as what the trend was. Now, when we talk about some of these things, as far as setups, we'll talk about some of the indicators that we're using, and we're going to go to some examples. So first off, what I want to do just real quick is let's bring up these charts. Now, I'm going to make mention of a couple of them. Pull up the first one. So the first chart we want to take a look at just real quick. And let's pull this up right here, okay? And I'll share these charts with you. So first off, we want to see crude oil, right? When you look at, let's say, crude oil, we know that this has kind of been a linchpin, if you will. Does the market go bullish or bearish, okay? If you look at, let's say, the crude oil chart, and by the way, you could bring up Brent oil. You could also bring up gas itself. If this chart is actually going up, it becomes more of a headwind for equities. This is the first chart. If you look at the chart that we're using, we've had a crossover in the last couple days. 2 weeks ago, we did an example on a couple of energy names, 2 or 3. I would like to include that here today. Do you have any energy stocks that you're looking at? Tell me. I won't tell anyone except for Jax. Now, the biggest thing is when we take a look at, let's say, crude oil, with the recent 10-period moving average going green, we actually saw a crossover on the 14th. We saw the 20-period actually on the 15th go green as well. And then today we're trying to get a little bounce. Now, we know that this is headline news, right? One day the strait's open, the next day it's not, the next day it is. We get it. Now, the other chart that we want to kind of keep an eye on is those interest rates. Now, it's nice when you're collecting the rate, but it's not as fun when you're paying it. If If you look at the rate, 4.59. Now remember, this chart's been going up, and how does this relate to technical indicators? It could be a breakout, it could be a crossover, and also has correlation. Those rates actually going up has been caused by something, the nasty I word, inflation, and those bond investors saying, if I'm going to loan you money, you're going to have to pay more for it. Okay. Now, what that can do is it can slow down growth, technology, discretionary areas, and so on. Could maybe start to go down somewhat. Have they? As this chart spikes. It's not that it goes up, it's that when it spikes. And if you look at the US dollar, that actually broke to the upside. We said Thursday that was a little surprise, and Friday broke to the upside. Today pairing back, but still above its moving averages. And the last chart, yours truly, is the VIX. Now, the best part of the three that we've talked about so far, or four now, the VIX is not breaking out. It's still staying in this range. So this probably tells us that the movement so far in volatility has been somewhat subdued. Thank heavens. Nobody wants a repeat of what happened about 2 months ago, okay? So probably the most damaging chart that we actually see is the rates, followed by the crude oil and the US dollar. Keep an eye on these charts. If those charts are actually going up, the majority are all four, most likely you're probably going to see some bearish examples or some technical analysis. Speaking of bearish technical analysis, let's start with the SPX. Now, the comment from Jack was, James, we're seeing the moving average crossover. Jack, I'm so glad you said that. If you take a look at this moving average, now remember, we have to, this is like baseball where you got to call balls and strikes the same from game to game or inning to inning. Remember, when these lines are green, we've been saying bullish, right? Well, we can't say bullish here, when the moving averages are red. I mean, if we're just being fair, okay? So what we do see is the 10-period moving average below the 20 and the price candles below the 10 and the 30. The 20-period moving average. So we kind of we're in that flag type scenario. Thursday was the high, then pull back Friday, pull back here so far here today. We're not saying intermediate long-term bearish, but Miss Barbara Armstrong is with us here today, and she could tell us about a fleeg. Okay? Now, if you take a look at this, the dangerous thing about doing bearish in this situation is, well, if you made a high, the highest likelihood is a higher low. So if you are going to take a bearish trade, you got to kind of think shorter term bearish. What does that even mean? Well, probably like 2 to 3 days to 2-3 weeks. Now, this class on trading, okay? It's not buy and mold here, okay? Now, if we take a look at something else that we're kind of seeing, if the S&P were to drop back down, I mean, if it did, okay? Let's say 71.90-ish. Let's say to the gap spot 72.80, 72.90 or so. This is not big type pullbacks. I mean, we haven't even checked back to that first area. All we have in the short term is a little cross down. Now, Jack also did make mention of, okay, if we go back to this chart right here, we did finally see so far an orange candle. When we get the orange candle, that actually means that we're up near an area resistance. And what do people tend to do up near an area resistance? They tend to profit take some. They tend to sell some. They tend to defend the position. Okay? All of the above. Okay. Now, just real quick, let's also go back to something else I wanted to bring up along with the S&P 500. I want to pull up the equal weighted. This has been something we've been watching over the last number of days. I want to be consistent. Okay? Don't want you to think that, I mean, there's something we continue to look at. If I bring it up, it's going to be consistent. Okay? And I like that. It kind of gives me a framework to go off. When we look at the equal weighted index, we talked about could it break out. We have not seen that. So the market breadth, we're not talking about breadth, okay? We would have liked to kind of see this go higher, showing that we're kind of seeing a widening of what is going up sector-wise, etc. We're not seeing that. Today, we actually see that push down, okay? Now, there's also two other charts that I think need to be fair to actually bring up before we look at the the NASDAQ, the SPX A50R dollar sign, as the market went up higher and higher and higher, the percent of S&P 500 stocks trading above their 50-period moving average waned, which is not, it's not, by the way, at some point you start to wane, okay? And you look at, let's say, the 200, the same idea. So the higher and higher and higher we went, the smaller or the less percent of stocks that were above the 50 and 200. That would make sense because we just looked at the equal weight and that was kind of showing some fading, okay? Now, the other chart that we'll actually bring up is the NASDAQ. And if you look at the NASDAQ, we'll just say NASDAQ and the semiconductors. The NASDAQ looks just like the S&P 500. The SOX, if you pull that up, we've had that historic run right there. It wouldn't be unimaginable to see some profit taking in that space. Probably doesn't mean bearish, but you get the runs that we've actually had where it went up, what 40% or so, 30% in such a short period of time, right? People aren't buying typically just to buy something. They're buying to make money, okay? And if we look at the Dow, we talked about that. Could that break out? Looks like the equal weight S&P 500 and the Russell, okay? So let's do this. So when we look at the Russell, that's the one that's kind of looked like it's bent down the most. But again, that's kind of the risk-taking index, if you will. The sentiment gauge on maybe fear or a pessimism, if it's going down, to take risk. So far, we're kind of seeing that we're in that flag condition. And I want to just look at just real quick if there's any questions, okay? If we take a look at this just real quick, any questions just real quick? I just want to look at this. Now, okay, Sam is kind of talking about the crude, the 10-year, and the VIX all up, okay? Now the comment is from Richard is risky. Don't flags last up to 7 days? Well, actually, technically, it could go a lot longer than that. It depends if you're looking at like a daily chart, a weekly chart, a monthly chart. Let's go to just real quick the energy sector, okay? So let me give you an example of what I mean, and I appreciate the question, okay? Now, first off, if you look at this, here's the funny thing, okay? If you pull up a chart long enough, anything that's been an upward trend had multiple flags on it. We get it, right? You bring up the Dow Jones Industrial on like an all-time chart, every pullback looks like a flag, okay? Get what I'm saying? Now, example given, you look at, let's say, IXE, and if we said, man, we were down here and it ran up to here, was this pullback longer than 7 days? Yeah, sure, okay? Now, if there's strength of the flags, right? The shorter the duration of the pullback, the stronger the momentum. That's kind of more like a higher low, okay, than like a flag. If you're asking me, you know, when I think flag, I'm kind of thinking something like 1 to 2 weeks. Something where we actually make maybe 2 lows and two highs. It could be a channel sideways or a kind of where it's pulled back somewhat. That might kind of be more of your standard flag, okay? Now, if we pull this up just real quick, we had a little run to the upside, then we fell back down, a little double bottom there, and then there we are. Now, this kind of on the right-hand side kind of has your classic W pattern. Now, before I get into a trade example, what is obvious point number one? Like if we're looking at the energy sector and we're seeing this, what is an investment idea number one? I just want to make sure you're listening on Friday. It would hurt my feelings if you weren't listening on Friday. Well, so when you pull up the energy sector, the first thing the investor would be looking for is maybe a stock in that sector. Wrong answer. It might just say, geez, could I maybe just look at buying the sector? Okay, just buying a smattering of the stocks, buying a group. That's number one. And by the way, that group has different allocation to it. If someone said, look, I'm going to buy like a group, some stocks matter more, which you might be okay with that. Okay. Now, number two, okay, if we were to, let's say, what are the stocks in the energy space? Let's go to MarketWatch. Let's go to Visualize for just a second. Now, If I were to, let's say, look at Dow Jones and say, okay, what energy stocks do we have in here? Well, the only one we have in there is Chevron. Now remember, this is Captain Obvious here, but sometimes we miss the obvious. And if you've raised children before, you know that sometimes they miss the obvious. It could be your spouse too. I do it too. You see how I claim responsibility? Okay? Claim responsibility. Everyone say, well done, James. Now, if we take a look at this, the Chevron. Okay, now here's the deal. If someone were to go out and buy, let's say, the group of energy, in that group of energy, if they consider that, is that group of energy a big chunk of it? Is it Chevron? It maybe could be. Okay. Now, if we take a look at this and you look at, kind of think back to what the sector looked like, what the stock looks like. Well, we kind of have like an area of resistance right here, little yank back, cross. Now, again, like we talked about 2 weeks ago, I kind of think of this like a hedge. Okay. If overseas, the U.S., Iran, it just keeps going on and on and on and on. Well, kind of think of this like a hedge, if you will. If it keeps going on and nobody makes a decision, that you might get crude oil to stay elevated for potentially longer. Now, example number one, does someone have to do an option? No. Okay. Now, I'm going to go back to just real quick the IRA account. We got some cash here, and I want to see if we can't maybe put to work some capital. Now, what I'm going to do is I'm going to kind of pick up the speed here, and I'm going to go to, got the earnings coming up, the dividend on 5/19. That's tomorrow. Now, let's go back to just real quick, kind of a little sheet where we can kind of write this down. We could all follow along. So number one, if I were to look at to do an example of this in class as a paper money example, 194.77, if I said support, and this one's maybe a little tricky, maybe it's not, what has been acting like support? I mean, has there been any points where we've fallen back down and then bounced back up? You got that area, which we did this morning. And how many times have we seen that? Okay. Went right down to the moving averages. Lo and behold, it just bounces out of nowhere. And then Friday went down to the moving average and bounces out of nowhere. And it just keeps happening. It went down to, let's say, Thursday and just bounced out of nowhere, or did it? So someone is obviously looking for those stocks that is kind of maybe in a range within 1 or 2% of that moving average and trying to buy them thinking that they might bounce. Okay? Now, don't be mad. Get even in the paper money count. Now, what I'm going to do is, if I'm going to go to, let's say, 187.63. Now, wait, you're not taking that as close as that. That's true. Like to have a lesser chance of being stopped out. So if we look at the stop, it's going to be 183.77. Risk per share is going to be a forecast. Why do you say forecast? Because the stop is not actual. We got 1089. Now, if you look at the percent of if we risk 10 of the entry price, it's really about 5.5%. That's not unusual. We talked about that. Okay. Now, if I went back to this, now this doesn't guarantee it's going to go up. We're just saying, look, it's showing a setup, and let's see if we can't do an example. Now, if I went back to this and just said, hey, dollar amount, let's say we did, example given, $7,500 worth of stock, okay? Now, if you missed our position size and discussion, go back to last week as well. 7,500 would be about 38 shares of stock, okay? So if I did this and I need to bring this back up into the paper money account, I thought I was, but I could bring it up quick. We're going to bring it up, buy custom with OCO bracket, and I am going to make it a bracket. We're going to put this right there, put that 7,500 back, and when we do that, there's the 38 shares. Now, again, you got 2 sell orders. It's a stock trade, data GTC. Where was that stop? We put that stop right at 183.87. 183.87. Now, Target, okay? If we said if it could get above there, okay? Now, let me ask you a question. If this was your example, and you said, James, I'm going to try to play a move. Here's where I potentially think it can get to. Where would you put the target? Where would you put it? Well, a lot of investors, they might look at this and say, James, if we're trying to get above that line right there, the next area really above us, midsection, right about, let's say 200. And the next area right above that is going to be right about 207. Are we on the same spot? Are you thinking the same thing? Tell me now. Speak now, forever hold your peace. And now if you take a look at this right here, you got about 213-ish. Were you thinking the same level? Paul says the 210. Okay? I'm not going to argue with Paul. I would never do that. Ever. Ricebird says 205. Okay? Now, if we take a look at this, 210. Now, here's me. I'm kind of like, I kind of want to know the odds. Okay? So, it's not a bad thing to go to the trade tab for just a second. And if you said, look, I am a stock investor or trader, I don't do options, that's fine. Take this one data point with a grain of, like, this would be good as a stock trader. Let's go to the June expiration just real quick. Let's change this, let's say 8. Let's change one of these columns to what's called probability of touching. So if you said, look, I'm a swing trader, I maybe like to trade intermediate and so on. If you said, James, I'm going to set my target at 210, this is really given the statistical odds currently of the stock touching the 210. Now, 210 happens to be a steal, right? Price. So from now into expiration, they're saying there's a 35% chance of hitting that 210 in the next 31 days. Now, Ricebird actually says, look, I'm going to go the 205. Well, if you're saying, look, I don't have a lot, I set a lot of targets, but I don't hit a lot of targets. Well, if you're setting targets where you have a 35% chance to go to there in the next 30 days, and you did 10 of those trades, well, you should probably only hit 35% of them, okay, on average. So let's say the investor said, James, I'm going to kind of set this at 205. Now, I'm going to keep this one at 210, but the point by Ricebird is probably fair, okay? If someone's saying, look, there's might not be great odds of it going up there, I want a greater statistical likelihood, we get it. We can see it. Now, that's the probability of touching, not closing above there by a penny. So I'm going to go to confirm and send. And now what we see is the shares of stock, target, sell the stock if we go to that price or less, and there's not a commission for U.S. listed equity. Send the order. It's weird. I'll fix that. Now, the other one I want to go back to just real quick. Now, did anyone have any other stock that was in energy that is maybe starting to show some bullish technical analysis before we look at a bearish example? Well, remember, if you said, no, I actually don't have that, and it's going to take you 3 hours to run a search, please don't do that, okay? You did not get into investing to be a professional searcher. If we went into the Dow Jones and I said, Dow Jones, let's close that. Let's go down to the S&P 100, go to the energy. Well, in the whole S&P 100, there's 3 stocks, which we can remember that. Conoco, Chevron, we just talked about, Exxon. I'm just going to show this just real quick. When we look at, let's say, Exxon, you would imagine it would be pretty similar. And boy, it sure is. But Conoco is the one that's a little different. Now, the comment came in before about a flag. Well, let's bring this one up as an example, okay? Now, I'm going to do this example really quick. Now, if we went back on this chart, if you looked at this, what type of price pattern do you see on the chart? What do you notice? Now, as I'm getting an answer, I'm just going to kind of draw some lines as I'm getting an answer. Well, number one, on the bottom, kind of see something like this. On the top side, kind of see something like this. We're kind of nicking some of these, got a high, something like right in here. And if we go back, whether we go back here, or we go back, let's say, farther there, or you go back farther there has been accumulation of the stock over time. Now, Could you say that maybe there's been 3 different polls and there's been a consolidation over time where we've had a pullback where this on the right-hand side looks like a flag? Sure. So I would not say the typical flag is like 7 days. I said 1 to 2 weeks, okay? 5 to 10 trading days. If you said 7 trading days, you're taking the middle of that. They can be longer, just depending upon what chart you're looking at. The one example that I'm going to do here quickly, if someone said, James, I kind of want to do an example of a probability-based trade, okay, which most trades are, if you look at it, COP. Now, on COP, what I want to do is on COP, if someone said, James, I think the stock could stay up above X price. If you were to kind of state a price level in which you would say, A, I think the price could stay above there. And second, I don't mind in owning the shares at that price level. What price level would that be? Well, some people might say, James, if it went down to 115, 117, we're above the support level still, or they might even say 120. Okay. Now we know if we sell the put at 120, there's a bigger premium, lower break even. Con, greater chance of the stock being below the 120 at expiration. But if we were to say, you know what, James, I'm kind of more bullish on ConocoPhillips, and I think it could do that. Well, we're going to go down to the 18th June, trade number 2. We're going to go look to sell the 120 for the 286. Now, remember, investing is math, psychology, and strategy, okay? And if we look at this, what is the math? Well, that math of that trade is really what we call ROR, which is like taking the option premium divided into the current stock price. Pretty close. And if you look at that, it's going to give us about a 2.5%. Now, I like to call that option yield. Watch the option premium to 286 right there and divide that into the stock price. If you do that, you're going to get right around 252-ish. Okay. Now, some people like to make sure that if they're going to commit, that there's a certain percentage that they're getting. Some like to get 2%. Whatever percentage it is for you. Most investors would say I would never commit less than 1% or 1.5%. Why use this more? Easy answer. There's still 30 days to expiration, and the second easy answer is that implied volatility is still 35. So in this example of kind of like a flag, longer term, we're going to sell the 120. Now wait, if you sell the 120, what is that doing? You're obligating yourself to do what? Buy the shares at 120 at expiration. No, at expiration and before expiration. So it doesn't have to be in the money, meaning the stock doesn't have to be below that strike. If anyone wants to sell those shares and the paper money account sold them, they become the buyer of the shares from now until expiration. The key, though, is they get all of the premium if that were to happen, irregardless if it's at expiration. So sometimes it's not necessarily all bad. We're going to go 296. Why? Because that's the mid price. Confirm send. So trade number 1 was on Chevron. Trade number 2 was on ConocoPhillips. Chevron was actually a stock trade. ConocoPhillips, okay, short put. Now, I'm just going to show you some of these other ones that kind of stood out in the energy space that we might want to be made aware of. Why? Because it's class on technical analysis, okay? And if we bring that up, the examples I'm going to show, if I were to, let's say, look at, let's say, FANG, okay? And I don't know why, if we're talking about something that's kind of getting a cross back to the upside, FANG is, okay? So that's just something to kind of note there. The second one, of the list that we're talking about now, Valero. Doink. Okay. Now, if I were to ask you what type of price pattern do you see on that one, you might say, James, that looks like a ascending triangle continuation. And I think we would agree. Okay. Now, we did 2 already, but if we had a third, okay, let's hold it, put that one, set it aside just real quick. Marathon kind of looks similar. The deal on these next 2 they really have what type of pattern? I'm getting the Monster, MSTR, and Monster and Coin. And if you look at this, the MPC and PSX, they kind of look like cup and handles. Okay. Now, if we come back to this just real quick, so that one and the other one, PSX. And if we drop that off, we bring this up, okay, and you look at, let's say, PSX, kind of like a support level there. This one kind of has like a little drop down, little run back up, falling back down, kind of like a little W right there, getting a little cross. So we said Fang, Valero, MPC, and PSX. Okay, so those are some other ones that we might actually keep an eye on. Now, let's actually go to, for example, we talked about, now sometimes when you're looking for basing patterns, sometimes what is basing, it doesn't reverse or it doesn't hold. Example given, we looked at actually MicroStrategy and Coin to see if these could be examples of reversing. Now, here's the deal. It's not that they're losers, it's how bad was the loss. Okay? Now, if I went back to, let's say, the monitor tab, and let's bring this up. Monitor, account statement, let's go MSTR. And what I'm going to do is see if it's in that right there. There it is. Okay? So I'm going to look at the stock trade, and I hope you don't mind the example that we're doing this, okay? So the MSTR, when we take a look at this, if we pull this up, the examples that we looked at where we bought those shares, it was filled at 185.40, okay? 185.40. And that date was actually right on the 4th, at least it was in this account, okay? Now, if we pull this back up and say, okay, where did that stock actually start to break down? We pull it back up, MSTR, and now what you're seeing is that stock is very, 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 very close. Target, we're nowhere near, but you're going to see that this is, I mean, could be stopped at any moment. Kind of surprised it's not. What is the stop price? 166.21. Now that's awkward because the stop is at 166.21 and the price is below that. So what should happen? What could happen? That would get stopped out. That should get stopped out today. Okay. And the stop's right there. This is a bracket order. So where did it kind of fall apart? It fell apart today when you know what broke down this morning, and you saw that. Okay. Now, the other one I'll kind of make mention of just real quick is since you brought up Monster, let's go to Monster Beverage. Now, I'm not going to do a trade example on this one because there's two other ones I want to get to. But if we're kind of talking about these cup-like examples, you know, sometimes we ask questions like, well, when am I seeing a bounce? Well, I mean, you look at the prior high there, you look at that actually kind of consolidation, and you look at, let's say, the little run to the upside. Now, notice, does anyone notice anything a little unusual about this? When we gapped up to the upside, we had two red candles there and there. Do you notice anything that's a little awkward? They are red candles, but read it further. Well, if we read it further, what's odd about that is the bodies of those red candles are not very big. What does that tell us? I mean, if we did close lower than where we opened, but not by much. We did close lower than where we opened, but not by much. So if there was selling pressure, there wasn't a lot of pressure where the bulls didn't come back into, they bought it and pushed it back up, or there just wasn't that much selling in general. Then we go to the trigger date. Trigger date is just a green candle, okay? It is not a hold. It's not a close above the high of the low day, okay? And if we said of these red candles, which one is lower? 1, 2. The answer is the first day, the 12th, that is lower. So we're looking for the price to trade above, close above the high of the 12th. Go forward to the very next day, see what we have. If you look at today, what you're now going to notice on that one is there's a green dot on the chart. Why? Because it's actually trading above the high of the low day. When we say the low day or days, what are the most recent lowest red candles? Now, here's the thing, what I kind of said before. It's not that someone has a loss. The question is how bad, what percentage is the loss? I don't say how many dollars was it. I say what percentage was it? Because sometimes we'll trade stocks that are $50, $100, $500, $1,000, and $10 is not the same. $10 on Bank of America is not the same for $10 on Costco. Okay? So when we run these numbers, what we want to do is we want to lose responsibly. What does that even mean? Okay? Well, if we kind of said, look, I want to kind of set a stop underneath this recent plateau of support, that recent plateau of support is right around 86. If we gave it a little bit more breathing room, let's say 85 and a half, okay? Well, if we did something like that, the stop would be at 83.79. Now remember, what's the risk per share? The forecasted risk per share, because the stop doesn't guarantee it fill. At the stop price, it's 441. What do we mean by losing responsibly or calculated risk? Well, if we lose on this trade and we lose to 441 and we lose 5%. Of what? The entry price. Okay? Now here's the deal. It's not that the investor has losses. It's that the losses are magnified. They're 20% losses of what you paid for the stock. They're 30% losses. There's 40% losses of what you paid for the stock. Okay? Now, if you kind of think about it, like when a bank has a car loan and they get behind probably 3 months, they tend to be coming for the car. Why? Well, because they want to only take a percent risk of what they lent for the car. A calculated risk. Not probably going to take a 50% loss. Same idea here. Now, what I'm going to do on this one, Monster Energy, speaking of staples, okay, if I went back to, let's say, MS, there it is. We're going to right click on the chart. Now, by the way, we're talking about staples now. Now, this is kind of funny to say staples because you're like, wait, Monster Energy is staples? Well, not everyone drinks coffee, okay? Some people kind of like a little different type of liquid refreshment, okay? Stop, okay? 83.79, type that in. Trade number 3, 83.79. Is it an option trade or stock trade? Well, look down the middle, stock trade, and a target. Now, do we have a target? Well, I don't know. It needs some help here, okay? Don't make me do everything. And now if I come back and kind of look at this. Now, could we maybe on this kind of say, look, this is a gap. Could it try to run the length of the gap? Okay, has that happened before? Yeah. What is that measurement? Well, let's show it. Let's go where it gapped up to, body of the candle, down to the body of the candle. And if we look at that and said, what is the area of the extension target or the 200 or the 261, we can see right on the chart there, what are those measurements? As we blow those up, now we can see those measurements. Now, if you're a fan that says, look, I like a greater chance of it hitting the target, 161. If you're a channel person like some people here are, speak now, forever, hold your peace, 96.64. Now, we're going to put 96.64. The channel is just kind of the support to the resistance. It breaks out and it tries to travel the same width of the prior channel. That's what we're talking about there. Now, if I put this in, trade number 3, okay, or is it 4? I know we're at least 3. And now what you see in this case is I'm going to go back to the pool balls. Now, if I did this and said, look, the dollar amount, let's say 4,500, how many shares is that going to be? 51 shares. Target, stop, it's a stock trade, okay? And now what we see in this case is confirm and send. Okay. And now, any questions on that? Now, I want to kind of also talk about another area that's kind of maybe being affected by oil prices staying higher for longer. Okay. And is anybody with me leading the witness? You're the witness. Does anybody know an area that's been maybe benefiting from oil prices staying higher for longer? Okay. Well, and let's send that order. There it goes. Now, by the way, if we actually do this, let me come back to something just real quick. If you do not realize that this is being broadcasted out on YouTube, you can subscribe for free. Also, reminder that if you, for example, want to make sure that you're aware of this, this is going to give us the playlist for this class. Okay, so this right here, if you want to bookmark this, you should. That way you can actually find prior sessions that we've done. Make sure you're aware of that as well. Okay. Now, by the way, to help others be able to find this content on YouTube, click the thumbs up. That way other people can find it on YouTube as well. YouTube is really like TV, literally. Okay. Now let's go back to this other areas just real quick that we're kind of seeing a little up movement in. Like what? Well, there's a group called the railroads. And if you look at this, now we know that if you know, diesel prices are going to be $6 a gallon, well, people that are buying freight, they might say, look, it might take longer, but I might just want to maybe change how I'm getting the product delivered. Okay. You have CSX. Remember, we kind of talked about flag pattern, how sometimes it might be longer than a 1 or 2 weeks. Well, that's probably about 3 weeks. The other one, which one am I missing? Yeah, UNP. And if you look at UNP, is it doing something similar? What type of pattern is that right on the chart? Chris, I'm actually, I'm not, I wanted to do bearish trades, but I'm kind of going off some other comments. And so I'm kind of bringing up some of the bullish examples. I like to do some bearish ones, but some of the charts we're seeing are more bullish than bearish. Okay. Kind of depends on how much time I actually have. Now, if I take a look at this, let's say CSX. Now, by the way, go back to what I said. The energy to some degree is kind of based upon some sentiment in the market, meaning if all of a sudden the strait is now closed, oil shoots up, is that bearish? Yeah, it's probably bearish for the stock market. Okay. Is it bearish for every stock? Well, the energy stocks might go up. So in a way, being bearish doesn't necessarily mean you have to be short or have to buy a put. You just might be trying to get an area that might go up in response to the market going down. Right? Now, wait, hold on. Could you say that CSX is somewhat dual purpose? Yeah. If oil goes up to 200, could maybe the choo-choo trains maybe increase on the backdrop of that? Yeah, to some degree. At some point, you got a risk. There's a risk of, do people buy stuff as much? I mean, that's the risk there. We get it. Now, if I said CSX, okay, so let's say on the backdrop that I was being pessimistic, which I usually am, okay, and I said, look, I think oil could go up higher for longer, and I think it could hurt the stock market, but you know, maybe CSX benefits. Well, the example given, if I came in here to CSX and I say right click on this chart, by the way, it's Union Pacific. Let's go back to CSX. Look at the prices, like this is a little higher than I remember. CSX. Now, again, this is in a way, it's a little different because you're thinking, well, I'm thinking bearish, a short stock, buying puts, so on. I just hit that, okay? If we go to buy custom, I'm going to go buy custom with stop for time's sake. If we looked at a plateau, remember, if this oil stuff stays higher, could we see some of these choo-choos go up for longer? That's the idea. Maybe airline's not as good, but the choo-choos. Now, if we came into this and said that plateau is right at 44.40, okay, fill that in. 44.13, 44.30. It's going to give us 43.41. 43.41. Now, that's trade number, I know it's 4. Now, here's the question. Of the examples that we did, you'd probably say that 3 out of the 4 are a little with kind of some risk to what the oil prices do. Okay? 3 out of the 4, which we just kind of been mentioning that, you know, that might be hurting some growth areas like technology, et cetera, like semis. So the biggest thing to kind of keep an eye on is these 4 charts. Today, we tried to kind of practice taking some bullish positions, but in a way it could be inverse to some degree. But being responsible to if this trade lost, what is the loss? It's about 5.8%. Now, what I want you to do is I want you to evaluate some of your recent entries and exits. I want you to look at what was the dollar amount lost and what was the percent loss. If you are taking losses bigger than 10%, is that what you want to do? Do you maybe want to kind of define that strategy a little bit more and be crystal clear on what those exits are? That's something that we've been trying to focus on and make sure that we're kind of clear on taking a kind of a risk that the investors might be more comfortable with. Now, I'm out of my time here today. Coming up right at the top of the hour is cover calls and short puts. And go out and practice what we talked about. Just understand that every time you do a bearish trade, doesn't necessarily have to be an option. Might be something that might be more inversely correlated to what the market does to some degree. Now, remember that you can subscribe to the Trader Talks channel. It's free. You could also, for example, click the thumbs up. That way other people can find it as well. And thanks to Barbara Armstrong for answering those questions in chat as well. Now, remember with what we discussed here today, it was done for example, illustrative purposes only. Don't forget to actually go to schwab.com/events to see other events that could be right in your backyard. And also, remember with what we discussed, all investing involves risk. And this class has been on trading with technical indicators. We did 3 stock trades and 1 option trade. And with that said, thanks so much. Take care. Bye-bye.